Markets kept their cool on Monday amid a fast-moving and volatile geopolitical landscape in the Middle East. But the longer-term risk premium has likely risen, while oil prices remain on edge, analysts said. Iran launched more than 300 drones and missiles against military targets in Israel on Saturday, marking the first direct attack on the Jewish state from Iranian territory. The offensive caused limited damage and no fatalities. Iran said it was acting in self-defense in response to a strike on its diplomatic compound in Damascus, Syria, earlier this month. Israel has declined to comment on its involvement. Also on Saturday, ahead of the strike, Iran seized a container ship in the Strait of Hormuz that Tehran said was linked to Israel. The sea passage is described as the world's most important oil choke point, with flows totaling around 21% of global petroleum liquids consumption in 2022, according to the U.S. Energy Information Administration. By Monday, global players including the U.S. and European leaders were seeking to cool tensions, urging Israel to show restraint in its response. Foreign exchange markets are pricing in near-term de-escalation in the wake of the weekend events. Adarsh Sinha, co-head of Asia FX and rates strategy at Bank of America, told CNBC's Squawk Box Europe on Monday. The safe haven US dollar was 0.15% lower against a basket of major currencies early Monday, also weakening against the Iranian rial and the Israeli shekel. Sinha nevertheless added that the fact that we moved from a proxy confrontation to a direct confrontation, even though that de-escalates in the near term, the longer-term risk premium probably goes up. I think the FX market ultimately will take its cue from oil prices because ultimately, that's the channel through which it spills over to the FX market, he said. Oil prices were lower in early Asia hours on Monday, cooling off from Friday gains which built on the expectation of an Iranian strike. Nymex WTI crude futures contracts with May expiry were 0.81% lower at $84.97 per barrel by early afternoon in London, while the ICE Brent contract with June delivery was down 0.73% at $89.79 per barrel. Markets had priced in the well-telegraphed event, which explains the price decline, Amrita Sen, founder of Energy Aspects, told CNBC's Street Signs Europe. That doesn't mean prices will continue to go down, she added, although their course will hinge on Israel's reaction and next steps. Economists and analysts agreed that overall long-term risks and uncertainty are now heightened. The unprecedented Iranian attack on Israeli targets casts a shadow over the economic and financial outlook beyond the region itself. The risk that the conflict in the Middle East may escalate further has increased, Holger Schmieding, chief economist at Berenberg Bank, said in a Monday note.